This morning, we are learning that the U.S. economy lost 23,000 jobs in July. The unemployment rate also dropped to 4.1%. Our economy experts are here to break this down for us. We've got NBC News Chief Business Correspondent Christine Romans, as well as Investopedia's Editor-in-Chief and Chief Business Editor of People Inc., Caleb Silver. Good morning to both of you. We always love when you join us. Christine, I will start with you at just what this means. I mean, it's not what we were expecting. The forecast was to add 83,000 or so jobs rather than lose 23,000.
It's surprise weakness in the job market. And if you think over the last year, you've got average job creation of about 34,000. So this is a reversal of what has already been a pretty lukewarm performance overall on average. And then you look at revisions here. The data scientists went back and they scrubbed these numbers and they actually revised down another 103,000. So that shows you a job market that's it's moving along sideways at best here. When we talk about the unemployment rate, you can see the gap in that chart there. That is because of a government shutdown when we didn't get the data. But the unemployment rate fell to 4.1%. And on its surface, that would be seen as good, a lower unemployment rate. It's because since January, people have been leaving the labor market. The labor force participation rate has been going down. So the jobless rate is down, but for a bad reason. People are dropping out of the labor market.
Caleb, your reaction here to these numbers?
Yeah, all the things that she said, especially those revisions looking at May and June, it wasn't as if the job market was that strong. It was just much weaker than expected. That unemployment rate of 4.1% is important because it is a reflection of a much smaller labor force right now. More people leaving it and less people involved in a period. A lot of that also due to the immigration policies. So you have a weaker labor force here. You also have basically a low broiling economy right now that's growing at only 1.5% if you look at GDP. Now, people don't live inside GDP numbers. They live in the real world, which is higher inflation and slowing growth, and that equals potentially stagflation.
Christine, let's talk this through by industry. Break this down for us, biggest gains and losses.
So we saw healthcare create jobs. That has been a consistent driver of the American economy and the American job market. Healthcare has been. So you saw some 22,000 jobs added there, but that is actually lower than the average. Leisure and hospitality, manufacturing, professional business services, pretty much there were job losses across the board here. I'm seeing broad-based job loss, or at least not robust job creation. And then healthcare is really the only bright spot there. These are numbers for July. Not clear what happens going forward, but remember, we've got renewed tariffs. Now, we have a war with Iran that has raised energy prices, which means a lot of companies are paying more to ship their goods and to just run their businesses. So it might be that they're pulling back a little bit on hiring because that's where they can save some money. Unclear where we go from here. I'll just say wages at 3.2%. So that means wage growth is slowing a little bit, and wages are now growing more slowly than the overall inflation number. So, Savannah, that means purchasing power of your family, it's shrinking.
We thank you for watching, and remember, stay updated on breaking news and top stories on the NBC News app or watch live on our YouTube channel.